market update for May. I'd like to welcome existing investors and prospective investors to the call and the video. Today I'm also joined by our Company Secretary and our CFO, Paul Miller, who will be working through the trading update with me today. In terms of the agenda, there's 5 key items to cover off. Firstly, the trading update, and I'm pleased to be here today to show that Spirit continues to grow on all key KPIs as well. And it's pleasing to work through those with you today and then give you a bit of a rundown on how we're looking at growth through the next few periods as well. Integration, I think what you'll see today is a business not just growing, but maturing and integrating all the acquisitions that have been acquired through the last period. I think the integration update is probably one of the most important aspects of the presentation today, because what you're seeing is not a roll-up of companies, but a really clean and valuable asset being manufactured by the executive team and the board. Without a brand in the marketplace, the operating model necessarily can't grow organically. So we'll also touch upon the national marketing brand campaign, which is in the market across Brisbane, Sydney, Melbourne, and also nationally through Sky News. A next gen update. So in April, we made our largest and most material acquisition, which was the Next Gen Group. We'll give you a really simplistic view of how we're using that assets to grow organically and sell more products across the group. Finally, a bit of a wrap up, Q&A. So the whole presentation should take about 20 minutes and we'll leave 10 minutes for questions. If we go over time, that's fine as well. For those who haven't been across these presentations before, I'll very quickly just go through what Spirit actually is in terms of an operating model and how we sell. We work across the key product groups at the top. So our legacy came out of the high-speed internet business, but we now have a cyber product, a cloud product, private or public. We also recently launched, as we said to the market during the period, our mobiles product, which is progressing very, very well. We have our own voice product. And finally, we wrap that around a managed service environment. So to give you just the basic economics of that, if we sat here 12, 18 months ago, the high-speed internet would have been contracts per month of about $500 to $800. We're now writing contracts of anywhere from $10,000 a month up to $100,000 a month. Including this year, we also won our largest contract with a total contract value of $6 million. So when wrapping all those products together, the economics get larger and the customer value position improves as well. We play in 3 key markets. And what you see here is being not a small business anymore. In the SMB sector, we have around 10,500 clients nationally across Australia. In the mid-market or the essential services market, we service approximately 200 to 300 clients, everything from schools to hospitals up the East Coast to large enterprises across our cybersecurity business. Distribution, look, we sell through digital. We have a sales force of over 140 people now. And in the next couple of months, we'll also announce our most strategic and largest white label deal in the market as well. So for those who haven't been up to date with Spirit, we've certainly grown, we've matured, and we have a very vibrant and high demand product set. In terms of the trading update, I'm not going to paraphrase all of these. This presentation is now on market, was released earlier this morning, but I'll touch on a few of the high notes. First of all, it's very pleasing to continuously come to these investor sessions and present a rapid pace of growth. And that is across the recurring revenue line. Particularly the one that I want to highlight today is the organic growth that we're seeing through the business. So I've had this question asked of me many times. So the evidence in the numbers today, we present that to you. So 30% of deals exceed $250,000 in total contract value and 17% exceed $500,000. So if you think back 12, 18 months ago when this business, we were seeing total contract value of somewhere between maybe $20,000 to $40,000 just on the internet side. So bundling those products together, moving to the mid-market, we're now seeing that organic growth, not just from new business, but existing and bundling of contracts as well. Recurring revenue, so we've seen 10 quarters of recurring revenue growth. So for those that like portfolio or an annuity-based business, we're certainly seeing material growth, and we announced today 16% growth on the last 4 months. In terms of demand for the products, I don't think you can get much bigger than announcing 75% increase in leads coming through the business as well. So demand, we've put the business in a very strong position from a demand perspective, and now we have 140 salespeople working through executing and deploying those services as well. Pleasingly, NextGen started with a bang through April and had a record month in sales and a very strong month in revenue as well. The pending service delivery, and I'll get Paul to talk to this in a moment as well, is sitting at 10.4 mil on IT and technology, and also 6.1 mil on the technology side of the business. So very healthy. Apart from the demand, you've got a very strong balance sheet. So it's not a business that needs to raise. We've got 23 mil in cash and available debt from the CBA that was increased recently. So on that note, I'll get Paul to run through the next few slides in terms of trading update, and probably the most important area that we're going to cover today is the pace of integration that's occurring in building a quality asset in the business as well. Paul, do you want to unmute? Thank you.
Yep, thank you, Sol. Sol mentioned I'll just spend a little while just running through the revenue numbers and the integration slides. So as Sol sort of highlighted, our total recurring and solution and project revenue is up 150% year on year and 8% from the comparative 4 months to $35.7 million. So this continues the strong growth achieved in financial year 21 in both recurring revenue, which is up 94%, and our solution and project revenue is up 224%. So very pleasing where we've been and where we're headed. The graph shown here, we've started to include, it speaks to our product mix, which I think is a really important graph. And it really shows the maturing product set across the Spirit Group, with the product portfolio now encompassing, a complete customer offering, which is inclusive of data, voice, cloud, IT managed services, and also security. So FY21 has been a foundation year of getting the product sets together, which is really then going to set the foundation to accelerate growth in the near term. So a few more comments on this graph, which I think is worth highlighting. You'll notice that the voice component has increased relative to this 4 months relative to the comparative, which is a reflection of our NextGen contribution starting to come in, and they had a record April sales month, as Sol indicated. The managed IT services has grown strongly. So this product set also includes the positive contribution from what we call our schools infrastructure program, which is run through our essential services division. So this program is very heavily weighted towards November and December in terms of its revenue. So, there's a high contribution that period, but it's very pleasing, obviously, that we can continue the growth into this 4 months. Our cloud and security businesses is also worth sort of noting have a longer sales cycle, but certainly the pipeline of opportunities is growing. And, we'd expect that the relative contribution of the cloud and security in these product mixes will accelerate in the near term. If you could go to the next slide, please, Sol. So it's very pleasing to talk to the 94% year-on-year growth and the 16% period-on-period growth in recurring revenue for the 4 months from January to April 21, which now totals that 16.6 million as referenced. On a percentage basis, this represents 46% of revenue. And as we've highlighted on the slide there, the group has had 10 consecutive growth quarters across the recurring book. And this really remains a key forward focus as we bring bundled solutions tied to recurring products to our customer base. Next slide, please, Sol. The slide that's presented references our total contract value and our pipeline view, but also we're giving a view here on the deal distribution. So on a TCV basis, it's grown 145%, which is new and re-signed sales relative to the previous year. The chart also highlights the pipeline of what we're calling our solutions and projects revenue, which is pending fulfillment and completion. As Sol indicated, the TCV deal size chart is an interesting one, and it sort of highlights 2 key aspects. Firstly, it's highlighting the deal spread across Spirit, but it's also highlighting the customer distribution size. We now service clients in the, from the small SMB space up to the enterprise space, which will obviously reflect in different TCV values as we move forward. So Spirit is selling across the whole spectrum of the Australian businesses, and our intent is to bundle more products to grow the recurring book grow the contract tenure, and also to create customer stickiness. And, you know, I'm really pleased with the $500,000 TCV, which is representing 17%, which is, you know, a really pleasing metric given that we've, you know, just pulled all the product sets together in the last 6 months. So if you could go to the next slide. So this is it's a busy slide, but it's a really important slide, as Sol indicated. So, you know, in addition to laying the foundation for our product sets in FY21, we've really also it's been a foundation year of building our integrated and consolidated platform to really enable us to progress and accelerate organic growth. So the diagram to the right illustrates what we call our standard operating environment. And that environment has been structured to effectively achieve 4 key objectives. You know, it's achieving a robust, efficient and controlled order to cash process across the group. It's enabling us to have one source of truth across the data and with a clear focus on customers' journey across the group. It's enabling our people to be unified within one standard operating environment. And it's also enabling all our operational units and leaders across the group to have real-time financial and customer-centric data. So on the left-hand side, it points to the amount of integration work that we've undertaken this financial year. I think a key takeaway is that by 30 June, 10 out of the 13 companies that we've acquired will be completely integrated across the entire environment. All of the companies will be within our NetSuite environment by the 1st of July. And, you know, the real next integration phase as we move forward is integrating or enabling the next-gen sales IP across into the Spirit SMB customer base. So, you know, my reflection is FY21, a year of getting the products sets in place and also a year of getting our standard operating environment in place to move forward. So back to you, Sol.
Thanks, Paul. Well done. Yeah, just a couple of points to reiterate that Paul mentioned. The trading update's also pleasing for another aspect is we see enormous seasonality coming through the November and December period through the schools program. So schools typically have the reverse blackout period to corporates. So in terms of growth, we saw a very strong November, December coming through Q2, but we see approximately $4 million of seasonality upside coming through the period through November, December. So to come out here today and once again show growth, which is a combination of M&A and organic, is really pleasing. So I just wanted to reiterate, growth certainly hasn't slowed. It's actually been expedited. But what you see is enormous growth and seasonality through Spirit, through the schools program that we're very proud to support schools up and down the East Coast. So we had a massive Q2, but we've delivered again over the top of that through recurring growth of 16% and 8%. So seasonality is a factor, and I want all investors to recognise that we do have a very large Q2 coming through the schools program, but we've turned up in May with another really strong set of numbers, which are growing on top of the Q2 that we had previously as well. So really proud of that. Just to reiterate on this slide, operationally and in terms of extracting gross margins, this is the most important piece of work across the organisation. We believe that in a mature state, this business can generate north of 18% EBITDA margins, but you have to get this right. There is no point acquiring these organisations and not integrating them. So as this plan says, by the 30th of June, this organisation will have a clean billing system, will have a ERP, and effectively it will be corporatised in the right way. So the way to extract margins and to stop the questions about roll-ups is to continue this piece of integration work. So there is enormous investment. There's about 12, 13 people working on this piece of work, but by the 30th of June, under the leadership of our COO, Mark Taguardi, this business will be materially integrated and efficient. And in that way, we will be a very strong asset, not just a growth business as well.
Yeah, and so it's also worth highlighting, you know, given that integration and consolidation, you can then leverage more effectively your procurement and purchasing power across the group, which will flow through to margins.
Yeah, so I know for those investors on the call, maybe it's a bit dry and boring, but I would say this is the most important piece of work, apart from the growth that we're seeing at the front end of the demand. In terms of efficiency and EBITDA margin, this one slide is the most important material piece of work for building a quality asset in the next 12, 18 months. Without, I guess, operational efficiency, you still need organic demand. And today, obviously, some of you may have seen this across Brisbane, Sydney and Melbourne. We've launched a new positioning for the business as well, which is if you do business, do it with spirit. So what you have here is strategy being executed in market operationally, but also with the brand. In the Australian marketplace, there is an enormous opportunity for Spirit to take two things. First of all, to take market share off the large telcos and IT companies across this product range. So what you see here is not just a positioning line, you have the execution of the strategy and the product set being shown. So this is across the Monash Freeway in Melbourne. The reason that it's shown twice is because we've taken it inbound and outbound traffic as well. But brand is only as good as the leads that come through it and the brand recognition. And today we show the results of some of the campaigns that we've got in market with just under 1,600 leads coming through the business across SMB and mid-market as well. If you've been to Sydney Airport or lucky enough, I hope you've been able to travel, this is probably the best way to describe where this one is where Zoom was. So the Zoom advertising, we've taken it from them just outside T2 and T3. So had enormous lead flow coming through this campaign as well. So that's in Sydney, and you couldn't present a branding campaign without the Harbour Bridge in the background. So this is in George Street with the beautiful Harbour Bridge in the background, getting a lot of instos seeing that and texting me, which is fantastic. So that's the other side of the campaign as well. We're also on Sky News. We've also increased our digital footprint as well across Google, both SEM and SEO. So what you're starting to see is a mature business. Assets are being integrated, growth is coming through, and there we are beginning to flex our muscles in terms of brand across the country as well. Just a bit of a next-gen update, and for those who aren't familiar with the transaction that was completed in April, this just gives you a perspective in terms of what the size of that organisation when merged with Spirit actually did for us. We moved to circa 140 mil pro forma revenue run rate. More importantly, we doubled our B2B customer base, predominantly in the SMB market. Again, it gave us scale. It gave us over 100 salespeople in the SMB marketplace. Typically, that business is outbound, so it does a mixture of telesales and BDMs. So, and I'll reiterate again, had a record April, and that record sales month will flow through to revenue over the next 2 quarters as well. We've got 350 resellers. So, our view of the market is we're aggressive. We'll attack the market in terms of gaining customers, both in terms of direct through the next gen channel, but also resellers as well. But by doing that scale, we can now advertise. So when the inbound leads come in, we have people who can take them. That's why that transaction was important. Again, we have created competitive advantage and in our view, a new market, right? Which is the merger of the telco and IT services segments as well. And I've said this before, if you don't believe telco and IT are merging, well, you're currently not on the same Zoom call that I am. It's right in front of you in terms of, and we're leading, I guess, that structural change in the marketplace. We're winning larger accounts. We're winning enormous business in mid-market and enterprise. The sectors we're having most success in is mining, education and health services and corporate and enterprise. And obviously recurring revenue, circa 65 mil coming through the portfolio as well. So that's what NextGen and Spirit are together. But how do we grow? And that's the purpose of the next slide. I've tried to simplify this so everybody gets it. It really is around bringing the 10,500 customer base together, segmenting them into 4 really simple segments. You'll have some customers in there who only take voice services, some who only take internet, a little bit of IT, and some a combination of the 2. So the opportunity is to segment them into campaigns and call them and have a discussion about how happy they are with their existing provider or if they have a provider at all. So we will mine that customer base, create 4 campaigns and call all of those customers. What we'll then do, if you've got only voice, we'll talk to you about your IT. You've got voice and data, we'll talk to you about your IT. The other products that we will offer here is an SMB cyber product, which we have enormous demand. And that intellectual property is coming through our Interlock business that was acquired in December. So the value proposition, quite simply, it's not complicated. It's one price, one bill, one contract, and one account manager. And the one account manager is a clear value proposition that the business will have one person that they can contact for all their services onshore, right? So what you have here is 4 campaigns being executed during that period. So I'm happy to take some Q&A on some of these slides as well. But I hope you understand that the NextGen business not only gave us the size of the customer base, right, but the depth and breadth of different products and services that we can sell across it. So what you need to think about is a business that's generating enormous external leads coming through, taking advantage of structural changes in the marketplace, but it is also mining and selling and cross-selling to an existing customer base. So we have organic growth that will flow through the business by demand coming through externally through the brand campaign, which we touched on earlier, but also we're going to be very aggressive mining our own databases and cross-selling the campaigns as well. And we've got 100 salespeople who are able to do that, pick up the phone and have a conversation with the customers, all onshore. Just a wrap, and when you're building these businesses, and we're doing it properly, right? We're certainly investing in integration, we're investing in brand. Sometimes you need to just take a step back and also just have a look at what's been achieved and how we've done it. So last year, and I might add, we did this through the COVID environment, pretty much through a little camera on my laptop. So there were multiple acquisitions. We created the standard operating environment that Paul has talked to, which allows us to create scale and efficiency. We created the brand, which you've seen today, and positioned it. Our investor profile has also grown. So there's just under 2,000 retail, well, it's probably 1,800 retail investors. We've also brought in about a dozen new institutional investors into the register in the last 12 months. SpiritX, about 22,000 SKUs have gone through there, and we now have a proper product portfolio. So if we're sitting here 12, 18 months ago, we're predominantly an internet business with a bit of consumer, which we'll talk to in a minute. Now we have a proper portfolio of customers, so a proper portfolio of products which are in high demand. Additionally, we can now expand nationally, and we have one positioning line nationally in the marketplace. So going forward, we clearly need to synergise these objectives across the group. We're expanding rapidly in mid-market, and that's where you're seeing those larger deals come through. So just for those who are not clear, mid-market typically is probably 200 seats or 200 employees up, maybe up down to 150. So we're expanding there materially as well. SMB, so the NextGen business, as I've talked to earlier, gives us the opportunity to mine and cross-sell across 10,500 customers, which we've never done before. The other update, I think we've announced to market the divestment of the consumer business as well. So that's going very well. The data room will be complete by the end of the week. And I'm pleased to announce that we've got 20 bidders potentially looking at those businesses as well through BDO. So that's probably the summary of what we've achieved over the last 18 months. Strong growth, the ability to mine the customer base, creating structural change, taking advantage of it, and also increasing our revenue, our sales. And finally, the business is profitable, right? We're operating as a profitable business. And obviously those numbers will go to market as part of our full year as well. I will close there, and I'll take a small moment just to move my screen and move to Q&A. I encourage everybody to offer their questions in the box. And I've got a couple coming through, so I'll just go to that box. Okay, I won't know in person, but provide an update on the sale of your wireless business. So maybe just a little bit of interpretation there. Brad, I won't say your surname. Brad's been a long-time investor of the business, so thank you, Brad. Obviously, the consumer business, as I mentioned earlier, there's 20 bidders who are looking at that. The wireless business, we do have a review of that business. We've had some interest in the wireless business. So the wireless business is our Sky Speed product range. We've had some preliminary interest, and typically from individuals who have, from companies who are interested in the consumer business. But at this stage, we haven't announced to market if that business is for sale or be divested, but the consumer asset definitely will be. Thanks, Mark. The question is around average margin per sale. Really good question. Mark, I'll try to answer that question. It's not always easy, but I'll give it a go, because when you do sell 3 or 4 of the products in one grouping, you do look at the margins as a collective, or you do look at it as an integrated deal. But typically on voice, if you're selling it on your own product set, you're running at about a 70 to 75% gross margin. If you're doing cloud, once again, if you're doing on-premise or private cloud, once again, could be 50 to 70. If we're selling our fixed wireless business, that's anywhere around a 60 to 70% gross margins. But however, you're going to need to be careful there because clearly there's a fair bit of CapEx that goes out around that product as well. And in terms of third-party data, it's typically 20 to 25%. Probably the product that we're selling most of right now is the NBN EE product. We have now become one of the largest resellers of that product nationally as well. Next question from Jonathan. You mentioned a large white label product. Could you give us an idea of what this entails? Sure. So the deal entails working with a very large managed service provider who's actually an ASX company, so I won't go into detail until it's finalised. So what they're trying to do, Jonathan, is looking at the SpiritX platform. So the SpiritX platform, we haven't talked about it for a while because so much has happened in the business, we're the largest digital provider of aggregation of data services. So we're looking at white labelling that product and integrating that into their sales platform. So they then get a clip. So it's straight through processed for the sale and it's integrated into one of the largest marketplaces, white labelled under that brand. So really exciting. We've got a few of those deals that we're working on. That one is maturing much quicker than the other 2 or 3 as well. So that's pretty exciting in terms of not just being the largest aggregator of data, but also spitting that out into a white label product. Brad, just in terms of future acquisitions, look, I think you never say never, Brad, on future acquisitions. I would say we're in a period of digesting what we have and focusing on integration and getting the divestments right. We don't necessarily have anything immediate to report. The balance sheet's in good shape, but I do want to use it for increasing margins, proving that there is enormous organic growth coming through the business and executing to the assets that we've bought. So no update right now, but I would say, look, we probably see 10 IMs, 10 information memorandums and opportunities a month. So people who say that we buy everything, we certainly don't buy everything. We're very picky around, and if you look at the way the asset has been constructed, it has been constructed with a strategic mindset going forward around what will create competitive advantage in the marketplace. There is no way that we could have launched that marketing campaign and generated the leads if we bought every asset that came across our desk. We don't do that. Question from Nick. Regarding seasonality in your business, do you expect June ahead of tax year? Yeah, so once again, we do see seasonality coming through November, December through the schools program. So around $4 million of seasonality coming through there. That's why we're very pleased on the result that we're announcing today. Growth hasn't slowed. In fact, it's kept up and gone above. But to answer your question, Nick, look, we're seeing enormous demand coming through May and June. It's just around getting all those services out to our customers in time. So, you know what, 50% of the business now is circular recurring and the other is professional services. It's just about getting it out. But we have no issue with demand. It's simply around timing and getting those products and services to our customers as well.
And I should say, Sol, you know, the seasonality also comes through in that January and April period. You know, it's quite heavily dominated with holidays.
Yeah,
and
good point.
With circa 50% of the revenue being sort of solutions and project-based revenue, you know, this year in particular, there's a lot of people that took that period off. So, you know, the results that we've released today are very pleasing in the context of that as well.
Yeah, so you know, make it really simple to Paul's point, and maybe Ivan raised it. November, December is our peak period, and then we wake up into January and it's our slowest period because we can't deliver the professional services component of the business. That's not a structural issue. It's simply seasonality that January, particularly this year, was just a slow month for people taking holidays off COVID because nationally the borders were open. So to come here and deliver another really strong result, we're really pleased with that. Offer you know, an amazing kind of November, December period for us as well.
And the same theory applies to April, which is why it's, you know, really pleasing to see NextGen had their strongest April sales month, I think, ever. So it was fantastic.
Yep. Final question from Nick. How should we think about the impact of the Brain campaign and 75% of growth on inbound sales? That's a good question, Nick, and a tricky one. Look, I think I put that, Nick, down not to provide guidance, but we're seeing enormous demand coming through for our products and services. And that's the first thing you want to see. Are you in a marketplace that has demand for your products and services? And we certainly are. Look, I think it'll come through the next 3 to 6 months. You know, some of them need a product immediately, and some of them are beginning to shop around for a new provider. So, you know, I would say 50% of our customers come because they're unhappy with an incumbent, and I won't name them, but you know who they are. And the other 50% of businesses that we win, those opportunities, cloud, cyber, they're structural change. Those opportunities weren't there 12, 18 months ago. So you have an organisation in Spirit, which is growing not just through old world business, there's structural change, and we're executing to strategy around that. That's all our questions. I don't think, I'll just check with our company secretary. I don't think we've got any further questions, Steph. Thank you. Well, it's just hit 11:31, so we're on time, which is remarkable. I want to wish you well for your week, and thank you for your support, and we look forward to continuing to grow Spirit National. Thank you again, and